Hey there. Let's dive into the latest buzz from the financial world, shall we? Welcome to Whiteboard Invest, your #1 go-to source for clear and concise investing knowledge explanation and news updating daily. Welcome back to Whiteboard Invest News, folks. Today we're going to dive into the hottest news in the crypto world, from regulatory changes to market movements and other key developments. SEC red flags. Coinbase proposal. The U.S. Securities and Exchange Commission, SEC, has officially objected to Coinbase's proposal to create a new regulatory framework for crypto. Is this a sign of a crackdown to come? Hard to say, but it's definitely a major development worth watching. Bitcoin price. Can it break out? After the dip. After a volatile week, Bitcoin is currently trading around $60,000. Analysts are divided on the near-term outlook for the top cryptocurrency. Some predict that Bitcoin could recover soon, while others are more cautious and believe the market could continue to fluctuate in the short term. Hong Kong Bitcoin ETF. Promising start, but trading volume slowing down. After an impressive debut, trading volume for the Hong Kong Bitcoin ETF seems to be slowing down. This raises questions about whether investors in the region are actually interested in this new product. Trump pledges tax cuts for crypto investors. If elected, former U.S. President Donald Trump has made a bold promise that he will cut taxes for crypto investors if he is elected in 2024. Whether this promise is enough to sway voters remains to be seen, but it has certainly grabbed the attention of the crypto community. Bitcoin Magazine CEO teams up with Donald Trump on crypto agenda. David Bailey, CEO of Bitcoin Magazine, is teaming up with Donald Trump's team to develop a Bitcoin and crypto agenda. This collaboration could bring positive changes to the crypto industry in the future. CPI Index. The market's bogeyman? Investors are anxiously awaiting the release of CPI, Consumer Price Index data, fearing it could negatively impact financial markets, including crypto. A high CPI could lead to tighter monetary policy from the U.S. Federal Reserve, Fed, which might not be good for the crypto market. Ripple CEO, Tether in U.S. government's crosshairs? Ripple CEO Brad Garlinghouse believes the U.S. government is targeting Tether, the world's largest stablecoin issuer. Is this a serious threat to the stablecoin market? Too early to say, but it's definitely noteworthy news. Stay tuned to our channel for more hot crypto news. Don't forget to subscribe so you don't miss any of the action in the exciting world of crypto. So, here's the scoop on the whole SEC versus Coinbase drama. Picture this. Coinbase is like, hey SEC, let's make some fresh rules for the crypto playground. And they filed this big request back in July 2021. But the SEC was like, nah, our old-school securities laws have got this covered. Coinbase wasn't having it, though. They went all legal eagle and asked the U.S. Third Court of Appeals to tell the SEC to get moving on those new rules. But the SEC just clapped back with a counter motion. They're pretty much saying, why fix what ain't broken? The SEC's got a few aces up their sleeve. Old is gold. They've been using the same rules for ages, and they're not about to call them outdated. Consistency is key. They've always had their eye on crypto, so no need for new rules on their watch. Actions speak louder. They've been busting illegal crypto moves left and right, proving those old rules still have some kick. And for the cherry on top, the courts are nodding along with the SEC, which kind of throws shade on Coinbase's claim that the SEC is going rogue with a power grab. Plus, the SEC did throw Coinbase a bone with a brief statement on why they said no to the new rules. So there's that. Oh, and just a quick hit on the crypto market. It's kind of steady with a tiny uptick to $2.25 trillion. Solana, SOL, and Binance Coin, BNB, are strutting with about 1% gains, while Bitcoin's playing it cool at $60,980.5, even after a bit of a tumble. Before we dive into today's next market-breaking news, make sure you hit the like button and subscribe to our channel to fuel us up for even hotter content than ever. Bitcoin is currently trading around $60,900, showing a slight recovery from the recent dip. It's been a tumultuous week for the crypto market, that's for sure. We witnessed a price surge to $65,000 last Monday, followed by a rapid decline to $6,200. Causing some concern among investors. But let's take a step back and look at the bigger picture. Zooming out to the daily chart, we can see that Bitcoin's price is still consolidating above $60,000. This is not surprising considering that Bitcoin has had 7 consecutive green months. The recent dip is simply a correction after a rapid price increase. It's like taking an elevator up and only a few steps down the stairs when you come back down. The cryptocurrency market is known for its volatility, and Bitcoin is no exception. Price swings and occasional dips are to be expected. It's crucial to focus on the long-term trend rather than getting caught up in short-term fluctuations. Bitcoin has a history of recovering from dips and resuming its upward trajectory. Remember, cryptocurrency investments are highly speculative and involve significant risks. Only invest what you can afford to lose. Conduct thorough research, understand the associated risks, and implement appropriate risk management strategies before investing in Bitcoin or any other cryptocurrency. Let's chat about the Bitcoin ETF scene in Hong Kong. It's a bit like the US, where we've seen a couple of days with more money leaving than coming in. But hey, looking at the bigger picture, this is actually a good sign for the future. It's like planting seeds now to harvest later, right? Now, despite the short-term drama, Hong Kong's Bitcoin ETFs are sitting on a stash of 4,155 Bitcoins. That's not pocket change. It shows that there's still a strong belief in the game. And get this, there was this big Bitcoin bash in Hong Kong, and guess who showed up? About 2,000 investors from mainland China. That's almost half of all the folks who attended. So, the buzz is definitely there. But here's the thing. The market's kind of holding its breath, waiting for the next big news drop. It's all quiet on the Eastern Front for now, but that's just the calm before the storm. Everyone's eyes are peeled for what's coming next. So, let's stay tuned and see where this roller coaster takes us. So, we've got 2 big names in the ring when it comes to the US economy, Trump and Biden. Trump's like, vote for me and I'll cut taxes. Who wouldn't want to keep a bit more cash in their pocket, right? But then, there's Biden, who's looking to up the taxes. Now, that might not sound as fun, but here's the kicker. He's also talking about wiping out some big debts, like student and medical loans. Sounds great for those it helps, but where's all that money going to come from? We've been throwing cash around like confetti lately, helping out friends like Ukraine and even talking about making college free. But the big question is, how do we cover the tab? It's not like the government can just shake a magic money tree. And here's where it gets real. If we don't figure out where the funds are coming from, we might just keep printing more money, which can lead to all sorts of problems down the line. So, whether it's Trump's tax cuts or Biden's debt forgiveness, we've got to ask ourselves, what's the plan to balance the books? It's a tough nut to crack, and it seems like no matter who's in charge, the answer might just be to keep the printers running. And hey, Trump's even giving a thumbs up to crypto now. Go figure. So, what's it gonna be? More of the same? Or will someone come up with a genius plan to sort this mess out? Time will tell. In the whirlwind world of cryptocurrency, it seems David Bailey, the head honcho at Bitcoin Magazine, is joining forces with Donald Trump's team. They're hatching a strategy for Bitcoin and crypto that's got everyone talking. Trump's diving into the deep end of crypto, signaling a big thumbs up to the digital currency movement. Meanwhile, President Biden is approaching the crypto waters with a bit more caution, almost like he's dipping his toes in to test the temperature. This contrast in crypto attitudes is setting the stage for an electrifying atmosphere, especially with the elections on the horizon. It's like we're on the cusp of a crypto clash of titans, and the outcome could send ripples through the market. So, keep your ears to the ground. The crypto beat is about to get a whole lot louder. So, let's chat about the whole CPI drama that's unfolding. Analysts are buzzing because the April 2024 CPI report is about to drop, and word on the street is it's going to show a teeny-tiny uptick compared to March. What's the big deal? Well, it means inflation isn't doing the cha-cha all over our wallets anymore. It's chilling out. But here's the kicker. The Fed's probably not going to slash interest rates anytime soon because of it. Picture this. The U.S. Bureau of Labor Statistics is like the referee here, and they're about to call the shots on April's inflation with the CPI report. It's a big deal because it helps the Fed decide whether to make money cheaper or not. The economists, those number-crunching prophets, are seeing a 3.4% rise in the CPI crystal ball for April. That's a smidge lower than March's 3.5% hike. Now the Fed's been playing it cool, saying, "No rate cuts, folks," until inflation takes a serious nosedive back to their 2% sweet spot. And let's be real, inflation's been a bit of a party crasher, especially with gas and food prices making us all a bit queasy. So, the Fed's been keeping interest rates on the high side to keep inflation from eating us alive. But wait, there's a plot twist. The Fed Cleveland's got this fancy inflation nowcasting gadget, and they're still betting on a stubborn 3.5% inflation rate hanging around. That's like saying, nope, no easy money for you yet. And here's a glimmer of hope. Core CPI is expected to go up just 0.3%, which is less than last month's 0.4%. That's like a tiny ray of sunshine saying, hey, maybe things are getting a bit more stable. Now, for the examples. Gas prices in April? They've been a major player in this high-stakes inflation game, and the Bank of America's brainy duo, Stephen Juneau and Michael Gapin, they're betting the Fed won't hit the interest rate brakes before Santa's on his way in December. Oh, and let's not forget the used car auction scene. Prices there took a 2.3% dive in April, which is a whopping 14% less than last year, says the folks at Manheim. That's a big deal for the CPI, but it's like a slow-mo effect. It doesn't show up in the inflation numbers right away, as the BMO Capital Markets eggheads will tell you. So, this upcoming CPI report, it's going to be a big influencer on what the Fed does next with interest rates. It's like the season finale cliffhanger that has us all waiting to see what happens next. In the ever-evolving tapestry of the cryptocurrency market, Ripple's CEO, Brad Garlinghouse, has cast a spotlight on the intense scrutiny Tether is facing from the U.S. government. With the precision of a seasoned strategist, he articulates his concerns, suggesting that any regulatory actions could ripple across the crypto ecosystem with significant force. It's as if he's peering into a crystal ball, foreseeing a black swan event on the horizon, a disruptive occurrence that remains shrouded in mystery, but is nonetheless anticipated with a sense of inevitability. Garlinghouse's musings are not without merit. The specter of Tether being utilized by sanctioned nations such as Russia to sidestep economic sanctions imposed by the U.S. has captured the attention of the Treasury Department. This concern was echoed by the U.S. Deputy Treasury Secretary, who pointed out Tether's emerging role in sustaining Russia's financial channels amidst geopolitical tensions. Moreover, a report by the United Nations has shed light on the darker corners of the crypto world, where Tether, particularly on the Tron blockchain, has become a conduit for money laundering activities, especially within the clandestine realms of illegal online gambling. In response to these allegations, Tether has mounted a defense, asserting its commitment to legal compliance. The company has implemented stringent anti-money laundering protocols and has not shied away from taking decisive action, such as freezing wallet addresses linked to Venezuela in an effort to comply with international sanctions. In a recent move to bolster its defenses against illicit activities, Tether has joined forces with Chainalysis to develop a system designed to detect and prevent illegal USDT transactions. Amidst this backdrop of regulatory challenges and market uncertainties, Tether continues to assert its dominance as the leading stablecoin by market capitalization, boasting a circulating supply of approximately 110 billion USD. The company's financial prowess was further underscored by a record-breaking net profit of 4.52 billion USD in the first quarter of 2024. Parallel to Tether's narrative is Ripple's own legal saga with the SEC, stemming from allegations of unauthorized securities offerings in the form of XRP tokens, a battle that has been waging since 2020. Despite the legal entanglements and the SEC's relentless pursuit, culminating in a proposed penalty of 2 billion USD, Ripple remains undeterred. The company has boldly announced its intention to launch its own stablecoin, signaling a strategic pivot and a commitment to innovation, even as the legal storm clouds gather. Ripple's announcement is not just a statement of resilience, it's a declaration of ambition. By planning to release its stablecoin on both the Ethereum and Ripple networks, the company is positioning itself as a formidable player in the stablecoin space, ready to navigate the complex currents of the crypto market. In essence, Garlinghouse's reflections and Ripple's proactive stance amidst regulatory scrutiny of Tether paint a picture of a crypto industry at a crossroads. It's a narrative of anticipation and adaptation, of challenges and opportunities, and above all, a testament to the relentless drive of innovation that characterizes the digital age.
Alright, that's hottest news today. If you guys did find this video helpful, leave a like and subscribe our channel for more free content. Thanks for watching. Peace out.